Hello everyone, welcome to today's session. Today we are going to look into one of the script called Industower. This script belongs to the infrastructure segment and we are at the quarterly chart. So let's understand the structure here, how the price has been moving. So if you look at this area, this is the bottom portion and price was able to break this initial bottom which was formed during September 2013 slightly and then again started going up. Now from the top structure, if you see, this was one of the drop which had followed by some consolidation, then followed by a subsequent drop, and then it formed kind of a double top uh, structure before the price continued up to the level of 120. Now let's understand from the quarterly chart how the price is behaving. So let's, if you look into the current quarter candle, which is live candle, price is trying to go up. Previous quarter, what happened is that it nullified almost the entire body of the was completely bullish. So price opened up here. It was trying to go down, and again it went up, and then finally closed here. So the continuation of this two candle can be considered as a nullified impact because if you look into the half yearly chart, it will look like a base candle which do not have a significant body. Now coming to the quarterly chart, what we can see here is that why this price came down after September is because of this reaction of this area which is marked here. So when in this weak portion and subsequent to this one, if you see that both the candles looks like a similar nullifying impact, it had some orders which were pending, and because of this orders, price was able to get a downwards move. Now, whenever such situation happens, is that what we can look into from a order flow point of view is that uh, if price was able to push to this level, that means significant numbers of orders are consumed. Now, if this supply zone which is consumed, then it loses the value, it loses the importance of being a supply zone here. Although there may be some pending orders here because we are talking about a quarterly period. So from a risk point of view, what we can see it there's a rally base and then followed by drop. So this will be the new supply area, which will be interesting to watch for. Now, if you come to the demand portion, so if you see all these are equal size candle, they do not have anything as a demand structure kind of a formation, either a drop base rally or rally base rally. So in such cases, what we have to do is that we have to find a demand zone at a lower time frame where it could be more evident. Ideally, if we need to mark the demand zone, we should be marking this week, which will be the origin of the move. However, what we can see here is that we have one structure which is like a rally base rally, and if we need to mark this zone here, we should be taking the marking like this and this, considering this is one of the area. Or what you can also do is that you can mark only the weak portion, and this is the exception based marking, but I'll prefer to mark the body so it gives me a better picture of how the price have been moving. So now if we understand this, this was the supply zone which pushed the price down. Again, in this demand zone, the price reacted, and we have numbers of orders. Because of that, price was not able to go further deep down into this zone and started moving up. So now if we can understand from a structure point of view, this supply zone is consumed and this demand zone is now having more power to push the price up. So it will not go straight forward up. So it will go in a zigzag pattern or it will have some continuation here. So let's understand how the chart looks on the monthly basis. So if you look into this complete flow here, you have maximum numbers of red candles. Then after hitting this area, which is the quarterly portion, price was able to go up a bit, but it could not sustain. It went sideways again, it came down, and then there was a equal amount of buying pressure. But this buying pressure was not sufficient to break above this area. Again, price started coming down. Why the price was not able to break? Because there was a monthly supply zone here which was trying to push the price down. So if you see from the structure point of view, this is one of the area which is untouched as on today. We do not have the uh, order flow here. Now the let's understand the structure on the monthly. So this is one of the fresh area. This is one of the fresh area. This area is not a fresh zone anymore. Reason being that all the orders whichever were pending here, they were able to push the price down, and then price reacted from here, tried to go up. Ideally, what you're seeing is that every time some reaction is there, price is making a new low. Unlike in this case, here the price came down, created a low here, created a base here, went up. Ideally, what should happen is that there should be a reaction from here and the price should go down. But here what we are seeing that price is reacting from this area, which is a monthly demand zone. It is a drop base rally. Then when the price came with solid selling pressure, it again reacted and went up. Now currently this candle, which is also a hammer at the bottom area, is somewhere reacting from this area, which is already a demand zone, which is again a demand zone reaction from this portion. And if you see the complete move here, it was able to close above this area. Now when price again started reacting from this supply zone, it again came back, reacted from this area, and now this time it has formed a good explosive candle which is closing out of this area as well as from this area. So if you see the previous resistance was 297 and this close was at 308, so which is above this level. So now currently if you see this area which is 316.49 is again pushing the price down. So what we should be expecting here is that because this demand zone is getting respected, this demand zone is getting respected, we should also see that current demand zone is also getting respected. So this is the expectation from the monthly. So ideally what we were seeing that it was sloping down, then lower high, then lower low, then lower high, lower low, then equal low, higher high, higher low, higher high, higher low. This is the expectation what we are having. So our thought process here in this script will be that we should be looking for a long opportunity. We should be buying here. And till the price reaches this quarterly zone, we are safe to trade it on the upside. Yes, this area, which is around 333 and 310, this is going to create some stoppage for the price. But if the closing of this price is not bottom of it or it does not break below this quarterly zone, then this area is weak because what we are expecting here is that price is now up. It is a retracement and then price will go up to this level. But in the current month, if you see, it is halfway done. So that means the selling pressure is not too strong. Now coming to the weekly portion. Same structure, we see the price is sloping upwards, then trying to come down with a significant move. However, what you see is that the buying pressure is quite high. Now, what I was expecting here is that I was expecting price to come to this area, which is also the monthly demand zone. Let me mark this area. So now if I look into this detail, so this was one of the area which I was expecting price to come down, which also have an impulsive move. So I was waiting for this portion where the price should have come or usually comes in most of the time and then reacts and gives a good impulsive move. But what we can see here is that in this impulsive move between these two candles, there is a zone which is quite powerful in itself, which is allowing the price to go up or rather say uh, where the buyers are there. So let's look into the details in daily chart. Before we move to the daily chart, let's understand how the structure in the weekly. So we are going to focus only on this portion. This is the candles which are relevant at this point of time because we know this is already a reaction. It is taken care. This is also a garbage area which do not have a proper structure, and the only structure available is a rally base drop is near the quarterly zone. So we are safe to play till this quarterly zone. Now, if you see in the weekly structure how the price is coming, so there is a buying pressure, then selling pressure, again there is a buying pressure, and that's how the price is stepping down. This was one of the explosive move where the price was trying to go down, but it found a base here and it give a upside move. Similar thing is happening here. So if you see the price is again reacting from this area and then going up. So if you look into the structure here, this is one of the area which is drop base drop. But you could argue that this is the area where which has closed below this portion. Yes, valid. But what we have to do is that we have to understand the overall flow of the uh, candles, like how they're moving. So what I can see that there was a significant selling pressure initially, but now some point of time we do not see a good structure in the lower time frame. Let's look into the daily chart. This is the daily chart, and this is the let's understand that why price is moving from this area. Now, if you see, there was a long consolidation, which is kind of an arc kind of a structure, which was trying to come down, found a buying here, and then created an impulsive candle, and the origin of the move started from here. Now, if I draw a trend line on the daily, something like this, which was holding the price for a quite long time, like this is dynamic level where we can see that price is getting resistance multiple time and it came down, found some buying here, and then it is going up. So some point in time, so whenever you have a breakout kind of a structure, so this is the area which has a breakout, and this is the area which has closed above this portion which is 283 by this impulsive candle. So what happens is that whenever you find such area which is closing and breaking the structure, this always plays a critical role in terms of price reversal. These are the areas we should be focusing on. And it also has a proper structure. It is a rally base rally with a gap. So whenever there is a significant gap like this, these are these are important for us to look for. So those trader who are looking at a gap trading, usually they will be buying here or this portion, but you can see that because of the selling pressure which was coming from a monthly zone, which is somewhere here, price could not go up and it broke this level and came at the bottom portion of this demand zone. So it also penetrated slightly on from a demand zone point of view. What we can do is that when we have the same kind of a range, we can consider as a rally, base, and rally. So if you consider a stop loss here, then you're safe. Otherwise, if you consider this as a stop loss, then you might have been violated here. Now let's look into the daily structure, how it is forming. So this is one of the low area and this is the second low area. So if I need to look into it, so what kind of a structure it is forming? It is kind of a double bottom. Now, if we look into the structure on the daily chart, let us understand how the price is moving. So if you see all this area are kind of a not so great area. So why I'm saying that we do not have a proper structure here. Price is trying to go down, going up, coming down. There are a lot of challenges going on with the buyer and seller who are not able to give a proper direction. However, we can see the price is stepping down. That means the sellers are winning. Similarly, buyers tried to push the price up with the distribution area, which had a lot of many candles. So eventually, price started to come down slowly, and we do not have any proper area which we can consider the price get stopped here. And based on the previous trend, what we can understand is that demand zones are getting respected, and currently the price is almost in a quarterly zones 25% area. So we could also expect that if the selling pressure continues or we found some more seller here, price could go down. But the chances of it going down cannot be eliminated considering how Nifty is performing nowadays. So what we can see is that this area will get violated because it is already consumed and we have all the orders almost taken out from here. This is one of the area which can stop the price here. So sometime what happens is that if there are more selling pressure, price trend to come down here by creating another structure, then reach to this area or the bottom portion here and then go up. But what we can see from the price action here, the evolved price action in the current time frame is that if we draw a trend line here, which is something like this, what we can see here is that uh, this resistance were being respected, price was not able to go up and then came down, and then it formed a double bottom, and then price is going to go up. Now if you look into past 1.5 weeks transaction or the way it is moving, you can see that uh, this demand zone is getting respected by this one, and price is going up. Now what we can see here is that even smaller time frame demand zones are also getting respected. So if you see, this is one of the area which formed inside smaller time frame. So within this candle you will have a smaller time frame demand zone which is respecting here. It had already a closing above this resistance area. This is one of the newly formed demand zone which also got respected by this candle. So today price opened slightly up the previous close, and then there was a bearish momentum, and eventually it became a hammer. And this hammer is getting formed in this area, which is also the trend line portion. And what we can see is that in this complete area, we do not have any proper supply zone structure. So one of the areas which you can consider, which is drop drop base base and drop drop, which has a achievement to close below this level. But the fact here is that we see this demand zone, supply zone, which is newly found one is getting broken. So that means the selling pressure may not continue, and buyers are more heavy. So what we can do is that we can plan a trade something like this, which is entry above this previous day high, and then looking at the stop somewhere between below the quarterly zone, and we can have a clean target up to some of this area. So I am not expecting that price will get stopped significantly around this area, but for a swing trade what we can plan is that this is one thing what we can expect, that price will go up. It may face some resistance in this area and again in this area, but overall price should reach out to this level. In case we get stopped out, in case the price do not intend to go up and later try to come down at the bottom area, this is one of the area where we can plan another trade, but here the stop loss will be below this area, which is bottom here. And sometime also what happens is that in case the selling pressure increases, price could come to one of this area. This is one of the good demand zone which has a rally base rally. Below this, all this garbage area will not be trading them at a lower time frame. And what we can also do is that we can also plan a trade here in extreme situation. But considering the structure, the formation, this is the first time where there is a W kind of a structure getting formed. Usually what happens is that price trend to come down, retest, consolidate, and then go up. So once price starts to go up, it is going to have a significant move, which I am expecting to have a at least 4 to 5% move each day, and it should reach to this level. So this is the analysis what we have today. Let me know your thought through your through the comment section, and in case you have any stocks you want us to review from the demand supply point of view, feel free to comment those stock names, and we'll try to take it up. Thank you for listening, and have a good day. Take care. Bye.